In last week's video, I was talking about a possibility of a dead cat bounce, and that was kind of alerted to us by the New York Stock Exchange Composite after it ended the 7 consecutive down day with an update. And also, we're noticing that the S&P 500 was down 6 consecutive day. And here we saw the S&P 500 finish with an inside week for last week, and we did have a positive week. And here, looking at the daily chart of the S&P 500, we see that it is coming up to this trend line here, and also it is sitting right near the little bit of a pinch on this 8 and 21 EMA cloud. Also have a 30-35 SMA cloud, so we could be looking at a possibility of coming up to some sort of resistance, and we might see a little bit of a rejection here. But we'll take a look at the price action in a little bit more detail later on, after we go and take a look at the market sentiment and the internal and see is there anything significant there that it could clue us in on what to expect for the coming week. Here, looking at the sentiment, we notice that the VIX came down and it's sitting at 15, and also the put call ratio also came back down below the 0.75. So after last week's little bit of a bounce, we notice that the market participant get a little bit more bullish now and less fearful. So we see them putting some risk back on in the market. And also on the up-down volume ratio, only 2 days last week, we saw a little bit of a negative on the up-down volume ratio. But other than that, it's not major. There's no major negative. Beside on Thursday, we see a little bit of a broad market selling on the daily advanced decline. And for the 52-week new low and 52-week new high, we did see the 52-week low came down, but we also noticed slight improvement on the 52-week high. So that's a little bit of a positive here. And in the New York Stock Exchange cumulative AD line, we did see the resolution of last week's positive divergence. And now this week, it seems to be finished with a slight negative divergence, as we can see that the cumulative AD line did not close at a higher high, while the S&P 500 did close with a higher high last week. And looking at the NASDAQ market also show a little bit of improvement as well. On the up-down volume ratio, we only saw a negative up-down volume ratio on Thursday, and also a broad market sell-off on Thursday. Other than that, the up-down volume ratio and the daily advanced decline was pretty respectable and broad-based in terms of the AD. And for the new high, new low, we did quite see a drastic improvement on the number of stocks making new 52-week low. It came down from above 200 down to less than 100. And also the new high, the number of stocks making new highs is pretty steady. So that again is pretty positive. But we are seeing a negative divergence between the NASDAQ 100 and the cumulative AD line from the NASDAQ market. So similarly to the New York Stock Exchange. So we could see a little bit of a softness here in terms of the advanced decline. All right, let's take a look at ES here. We're looking at ES. Remember last week I was talking about this balance area here. And if it could move out of this balance area, then we're looking for it to come up to this balance area. As you can see from this dead cat bounce that we experienced last week, it is budging right up against this upper range of this balance area. So for the coming week, if the price could come up to this low volume zone and get up here, then we'd be looking for a possible a V-shaped type of a bottom. And we'll be looking for this all-time high to be in play. Now, not necessarily we're going to hit that all-time high next week, but definitely that's the direction that the E-mini S&P 500 might be headed. Now, if it come up and chop around here and come back down, although we have this little bit of a trend line, we could see that it could be bumping up against this resistance and come back in. Then we are looking at the possibility of what we call the look above and fail. They'll be looking for this second leg of this pullback. Remember, we were talking about that last week, about this dead cat bounce, and then come back in for this second leg of pullback, and that is only still somewhere less than 9%. So that's a typical pullback type of percentage, and it is not unreasonable to expect that. So the key thing to watch is to see would it be able to get above this 5176 or basically 5180 area, get above this area and see would it be able to come up here, because this would be more of a look below and fail, then we expect it to retrace back up to the top of the range. And if it come back in again, basically looking for it to retrace back down to this 4860 area. And looking at the SPY, it's pretty much the same type of price action that we are monitoring. If it could come up to this 512 area here, then basically getting back up to this balance area, it will look at the possibility of moving back up to the all-time high. And that would also be the look below and fail type of a price action. Now, if we come up and found resistance and get rejected back down into this balance area, then we are looking at a look above and fail. Then we are looking for a retracement back down to this 480 area here. And once again, just like the ES, this represents somewhere between 8 and 9% retracement or a pullback. And look at the NQ, the E-mini NASDAQ 100 futures. We see that again, we're basically looking at this huge balance area, and you can see that the price came down to this volume edge or this low volume dent here and got a nice bounce, hit that cap bounce and come back up. So for the coming week, we're going to watch to see what the price be able to get above this level here, this 18,100, and watch this high volume node here. And if we could get above this high volume node, then we be looking at the all-time high to be in play. Now, what I expect is that we probably will get a little bit of a rejection here and get pushed back down, and then we trace back down to this level here. And once it breaks this 17,100, I'll be looking for the retracement down to this area. After it filled in a little bit in this area here, then it brought out this entire balance area. And that would be probably the the pullback price action, and then we could see it come back up. And here on the QQQ, you can see a similar type of price action. You see that I have a balance area here, and if we could get above here, then we're basically looking for the possibility of it to come back up to the top edge of this balance area. But I do expect it probably will see a little bit of a rejection here and push back down. And if it breaks this 413.50 area, then I'm looking for this thing to come down to possibly into this area here. To get a little bit bounce and then come back up. Now, if you'd like to get a more detailed analysis on my day-to-day trade plan level for the E-mini SP500, the ES, and also the SPY, go check out my Substack newsletter at smtraderca.substack.com. So overall, the market did not carry away from getting a little bit euphoric in terms of the dead cat bounce, and neither did the market participants show, increasing fear. So right now, we're basically looking at a possibility of a continuation of this bounce here. We probably got a little bit more upside to go before it hits some sort of resistance or rejection to see it reverse back down for the second leg of this pullback. But in the meantime, the AD line is getting a little soft, so keep an eye on the daily advanced decline. If you like the content in this video, be sure to smash the thumbs up to give it a like. And if you are new to this channel, subscribe to help support this channel. Thank you for watching and good luck on your trading.